So how much capital gains tax are you likely to pay on an asset that you dispose of? Watch this video as I go through all of the details. Hi everyone, my name is Simon Misiewicz from Optimise Accountants. I'm your finance and tax director. I'm here to help you to grow your wealth as well as reduce your tax liability. And in this episode, I'm going to be talking about capital gains rates and capital gains tax allowances. So let's get into the details. As we do so, there is a link that I think you should be looking at, which is HMRC's very own page about capital gains tax. That link is just below this video, so go ahead and read that at your leisure. Let's talk about capital gains tax and what rates will apply. Well, this is after the budget announcement, so I'm going to be talking about the year 2020 and year 21. You will see from the budget announcement that the capital gains tax rate allowances has been upped to 12,300 thanks to the Exchequer. So anything below that value, if you sell of an asset, then it will be free from CGT. You will need to still to record it. I always think that you should record any disposal of assets that could be questioned in the future. So as long as you dispose of it and you record it on your tax return, then you should be okay. Don't forget that most of the capital gains tax does now need to be reported within 30 days as well if you're selling a buy-to-let property. So make sure that you do that report as well. But let's say that let's imagine that, by the way, should have said, if you do not make a gain on a particular asset, then you do not need to follow the 30-day ruling of the CGT reporting. So just be rest assured there. However, if you exceed that £12,300 and you are a basic rate taxpayer, then you are going to be paying 18% CGT rates. Now, if you're a high rate taxpayer, that means that you'll be paying 28%. It is therefore possible that you could be a basic rate taxpayer because your earnings, let's say, is employment earnings of £30,000, but you have a disposal of a £100,000 gain. You will indeed be a basic rate taxpayer for a proportionment of that disposal and a high rate taxpayer on the other aspect. So do be careful on that. Now, if you're watching this video thinking, well, Simon, you've got these rates wrong because as a basic rate taxpayer, I should only be paying less than the 18% I've shown. Well, that's true, but you do need to bear in mind that a buy-to-let property investment, and if you're watching this video, you will be caught by that, will be subject to 18%. So please be careful about that. And 28% instead of 20% as we've shown on there. I think this particular slide really tells a lot of stories. Pictures always say 1,000 words, don't they? Let's go through this then. So what I've done for you is I've identified that there is a couple, husband, wife, civil partner, and they have 3 years worth of CGT allowances. And what I've said here is really it's an opportunity to plan when you sell a property. So if you know if you need to sell 3 or 4 buy-to-let properties, then you ought to be utilising your CGT annual allowances of 12,300, and bear in mind if you're a couple that is 24,600. So why not phase the disposals to make the best use of your annual free CGT allowances? It'd be crazy not to, because you are in danger of paying tax because you're trying to speed up the disposal process. Now, I do appreciate if you are a basic rate taxpayer, paying 18% may not be too bad. But actually, if you don't need the money and you want to dispose of these assets anyway, well then why not utilise your CGT allowances? Now, the other side to it is some people will forget that they've made a loss on a disposal in a year and don't record it. Well, that is a sad mistake because I have seen many clients, including myself, by the way, that has not made the best business decisions. So you have this loss of selling an asset. So you could, if you recorded it, utilize that loss to offset any future gains. As a result, well, the example here is a £50,000 gain on selling an asset, but you're bringing forward the CGT losses from prior years, which means you are only going to be subject to £35,000 on a gain. Now, that's something to bear in mind. Now, the other side to it is, let's imagine that you've got a couple. You've got Sarah, she's a high rate taxpayer, as you can see, she's earning more than £50,000. You've got John, who's a basic rate taxpayer, maybe self-employed, part-time or worker, looking after family and the kids, whatever. So you've got to think about this, because if you're selling an asset, then you've got to be noticing straight away, well, she's a 40% taxpayer for her income tax, but she's likely to pay 28% tax on any disposals, and John here will pay 18% as a basic rate taxpayer. Now, what I've done for you is I've shown you a total taxable gain, and what we want to do is allocate it in the best way possible. So this is a gain of £35,000. We need to take into account the CGT annual allowances of £24,600, which each of them get the 12.3. And basically it means that the remaining band will be the 10,400, but we're looking really at allocating as much of the property now to John. I'll tell you how to do that, but I want to give you an understanding of the principle. So if we can shift some of the asset over to the lower taxpayer, then all of a sudden you are going to be in better shape. You've got the share of the property, as we mentioned there, and that's going to be useful because we want to understand now what the percentage of the property, or the gain especially, will be for the next calculation. So what we're doing here is saying that Sarah should only own £12,300 worth of this gain, which basically means she needs to own no more than 35.14%. I know, a bit crazy, right, in terms of decimal points. And then John has £22,700 share, which basically he has 54.86%. Why is that useful? Well, because of the gain, of course. Sarah, bearing in mind in the previous example, pays no capital gains tax, but John would pay 18% on the gain he's made. How do you do that? Well, simply by using something called a property deed. That, by the way, you can watch in this link above my head. Plus, I'll enter the URL below this box so you can watch how to do a deed of trust if it's at all relevant. And I've also created an article for you to read. So if you are a couple relationship, you want to know how to reduce your CGT liability, then why don't you go ahead and read that article? Well, why not book a call with me, Simon Misiewicz, your Finance Tax Director, for at least an hour to understand how we can help you grow your business without paying the tax.